Okay, welcome back to Rand on Real Estate. I'm Greg Rand, your host on 77 WABC and WABCRadio.com. We've been talking about the idea of unintended consequences, or as I've been calling them, self-inflicted wounds. And we kind of teed it up that we've got some happening right now as we speak down in Congress. And a friend of mine wanted to duke it out with me on the air about this because he has a different opposing point of view. You with us, Paul?
I'm with you, Greg.
All right, this is Paul Adler. He is the Vice President of Rand Commercial Services. He's a commercial real estate genius, and he's also a political operative, or has been in his past. And he's got a different point of view. He's one of my favorite liberal people on the planet, but I guess I should have left that for you to figure out for yourself. So, Paul, what I was just talking about is how Chris Dodd, on his way out to pasture, is just taking one more swipe at the private sector by having these farcical hearings on Capitol Hill about how evil, predatory banks, blah, 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 have victimized the public, blah, blah, blah. And basically, I just see this as one more opportunity for them to try to make that stick, that populist message about how big corporate entities are evil. And so you see it a different way, all right? So they're saying, we got to stop foreclosures. We got to let all these people that aren't paying their mortgages stay in their houses. I think it's crazy. What do you think?
Well, I don't think it's crazy at all. I think that, I agree with Larry DeRita, the Bank of New York, who says, the Bank of America spokesman, who said that they agree with all 50 attorneys general in the United States that we need to take a look at the structural problems.
So if somebody had a gun to your head and told you they wanted to know if you agreed that, I don't know, George Bush was the greatest president ever, you'd say you agree even though you don't, wouldn't you?
I would say I would not agree with that.
With a gun to your head?
With a gun to my head, I wouldn't say that. And I don't think that all 50's attorney general in the United States are all patsies for the Obamas and Chris Dodd and everybody else.
Well, yeah. Listen, the regulation, the financial regulation reform that Chris Dodd had the guts to actually go out and sign his name to after what he did with Fannie Mae, him and his buddy Barney, basically bastardizing Fannie Mae and Freddie Mac and creating the setting us up for this entire economic disaster. I'm not saying there's not other people that are responsible for it, but for those guys to come out now and deem themselves worthy of regulating everybody else but themselves, everybody else but Fannie Mae, I can't help but look, you can't get 50 attorney general to agree on anything. And the fact that all 50 of them agree, and then Bank of America, which is really a titan of industry in this country, they've got to bow and scrape in front of these guys with their big desks 17 feet up in the air looking down. I mean, Chris Dodd hasn't even ever contemplating anything as complex as what these people in Bank of America have to deal with every single day. And yet there he is passing judgment on the fact that they got some paperwork screwed up.
Bankers and Wall Street and everybody agrees that there needs to be structural changes, because if we're going to have a sustainable recovery, if we're going to have the restoration of the economy, and we need to resolve these outstanding issues. And the fact of the matter is that you can talk about Greg and Barney and personalize this issue, but the fact is that the Wall Street moguls, the Washington Poles, the government regulators, the private rating agencies, the unscrupulous lenders, and the unqualified borrowers are all to blame. And what we had here was these guys, I think it was Mr. Cavuto this morning, who said, they gunned the economy. They just pressed the pedal and they went forward on the economy. Well, they not only pressed the pedal, but they forgot to put on the brakes. And I don't think that you can personalize this issue and take it there. This needs to be changed, and it needs to be regulated. And the fact of the matter is that you cannot throw these people out when you have these kinds of legal impediments, and the lenders were doing such faulty work.
Let me address that for a second, because I've dug into some of this and seen the allegations of what they're calling fraud. You hear about the robo-signing. Robo-signing is another word for, I've got 50 foreclosures that I have to process. Every one of these files are identical to the previous one with the exception of the borrower's name, account number, and property address. Every other thing is identical, and yet they're talking about how these robo-signers sign them without reading them. Now, again, let's remind everybody, we're talking about the same people who signed the health care bill without reading it, but that's a different conversation.
No, we're not. You're talking about the banks, the great titans of private industry, these great self-regulators. They were predatory lenders. They took a good thing and made it bad, And instead of dealing in moderation, these are the guys who just took these things. They knew they were bad loans. They packaged them. They sold them. And they went on their way knowing full well that this was going to be an issue later on.
Well, I feel like I got to remind you of something that I know you know, but you must have forgot about. That in the mortgage lending business, the vast majority of single-family loans and 1 to 4 family loans are what's called conventional or conforming. The definition of conventional and conforming is it's backed by Fannie Mae and Freddie Mac. In other words, those two companies have a special charter with the government enabling them to give loans out at a lower rate than any private bank can. And so, therefore, they dominate the market they want to dominate, which is that residential market.
Oh,
they're the ones,
Greg.
hang on a second, Paul. They're the ones that set the underwriting guidelines. They're the ones that say, here's how much you have to make, here's how much your credit score has to be, and here's how much money you have to put in as down payment. It was Fannie Mae and Freddie Mac that first got this ball rolling by weakening those underwriting standards. And
and then Countrywide, Ameriquest, and Merrill and Goldman. So you're telling me that there was a ledge, and just because there was a ledge, these guys at Goldman and Merrill and Ameriquest and Countrywide, they went flying right over the ledge.
No, what I'm saying is if Angelo Mazzillo from Countrywide was sitting there with his tan and his white teeth and his gold cufflinks looking over the edge of his giant desk and passing judgment on all the other people that were responsible for this thing, it would make me want to vomit, because we know the role he played, and we also both know that you say I can't personalize it. Barney Frank, we just played audio of the guy, okay, lying through his teeth. Barney Frank was the one who, more than anybody else, him and Chris Dodd, the heads of the banking committees, they played a bigger role probably than anybody else in the American economy.
You mean bigger than the crooks on Wall Street?
Yeah.
Bigger than them, bigger than the big greed? Come on.
Yeah.
These people, the borrowers, in many, many instances, I'm not saying they're all innocent, but in many, many instances, these people were pushed, and everybody that grew up in the last 10 years and had a home knew that they were just being told to go out and borrow more and refinance, and the value of your home would keep going up.
Yes, I know. We're supposed to. Well, by the way, you're listening to Rand on Real Estate on 77 WABC. I'm Greg Rand. I'm talking to Paul Adler, and we're having a friendly conversation here about who's to blame and who should be passing judgment on who when it comes to this housing crisis. Here's the thing that
bubbles burst, and your greedy friends on Wall Street and the bankers and all of those people that gunned this economy to the point that they couldn't stop when they got to the ledge, and they fell off the edge.
Yep. Listen, I don't disagree with the gunning the economy and then greed taking over. But here's my question, okay? Back to this robo-signing thing. Now, you and I, we've done a lot of real estate transactions over the years, and we know that there are times that there are, maybe 20 or 30 pages worth of legalese that a lawyer scans through. When you've got the very idea that the banks are being fraudulent in their foreclosure practices because somebody who hasn't paid their mortgage in 18 months is being foreclosed upon, everything is in order except for the fact that they found somebody who admitted they signed a piece of paper without having read the document because it was the same exact document they read 3 months ago when they started this foreclosure process. I just think it's a little bit disingenuous to be talking.
Two rights don't make a wrong, and if someone didn't pay their mortgage and they willfully did that, and there were reasons that they didn't do that, then they should be foreclosed on. On the same token, the integrity of our system of law requires that these things be done lawfully to begin with. They didn't do them lawfully to begin with. We're not talking about the foreclosure process being flawed. We're talking about the fact that being in a regulated industry, for being a managing partner of a brokerage house, that you have to follow compliance rules. They didn't, and they were sloppy, and it was indicative of the greed taking over the responsibility that they have to the public as well.
I think listen, I'm not sitting here defending people not signing these things, but the point I'm making is that it is not indicative of fraud. It's indicative of sloppiness, and there's a big difference. And listen, I know that you're having a bad month, Paul, and I can hear it in your voice. I know that you probably haven't even sat down in a couple of weeks since the routing that you guys took in the polls. So I'll forgive you for the tone, and so will my listeners,
Greg,
I'm sure.
Let me just say this. I know that a spanking in 10 is going to mean a victory party in 2012.
Oh, okay. Well, we'll see about that. You're talking about Hillary, I'm assuming, right?
That would be my prayers answer, yes.
All right. Well, hey, listen, this was good. I appreciate it. We'll do this again sometime soon because I'm sure that your pals in Washington will find another excuse to embarrass themselves, and we'll come back on the air. So thank you, Paul Adler, for being with us.
Thank you, Greg.